traders, this is Juan Maldonado from FX Traders Edge. It's a pleasure to be with you analyzing the markets. So let's start taking a look at the euro that has been climbing during the last days. You can see a lot of green candles, and today's consolidating. We are expecting a little bit more of a bullish price action this week. The Fibonacci target for the B leg is at the 61.8%. So mainly the plan on the euro is to have the price building this higher high, and once it starts reversing, could take the shape of a head and shoulders top formation, something like this. This will be the neckline, or maybe a double top. Let's see which one the market wants to show at the breakout of the trend line, or during the right shoulder. We can plan the short trade. The minimum target on the euro will be the previous low, but always wait for the validation. Never trade just because the wave count or the Fibonacci levels. Wait for the validation, for the completion of the pattern, and then take the trade, because when we add tools to the Elliott wave analysis, the chances of success are going to increase. But if you just use the Elliott wave count with the Fibonacci targets, then it's going to be pretty complex to be successful. So the combination of the tools, it's the best. Also, Elliott wave is not made to find triggers, is to understand the market, is the roadmap of the market, and then we need to add these validations to trigger the trades. So that simple is the setup on the euro. Let's take a look at my favorite for this week, that is the dollar yen. The dollar yen, it's in a complex hourly chart scenario, but if we go a little bit higher in the time frame, we can see that during the first part of the year we have this long tail candle. I'm calling this a wave 3, and the target for this trade, this is a consolidation pattern. So once it's over, we are going to take the short trade, and I think that is already over. I'm going to give you details in just a second, but the target is going to be the previous low. So our mission here is to capture all this distance. Sounds good, right? Because the price is at the 109 area, and we have all this potential. But now, how to do it? I already tried for the first time to take the trade this week. I closed the position with a really small loss, 30 pip, but I want to try it again. So one of the ways that I would like to trigger my trade is to take the short trade below these lows. I'm thinking 109.10, adding that safety zone to avoid being trapped on the trade. So once the price starts falling below the 109.10, that's where the sell order should be, with a really small stop loss. So let's get ready to follow this nice trade. And let's take a look at another market, the S&P. The S&P has been climbing up. I believe that this is a consolidation, that this is not an impulsive leg. It's just a corrective, a big corrective wave on the S&P. The price has been making higher highs. So we shouldn't take a short trade unless we have the breakout of this internal trend line. There we go. The price is doing a consolidation at this area. Could be also similar to a pennant formation. These patterns are not likely to be reversals, are more likely to be continuations. So that's why I'm looking for a higher high. But there is something else. If we go to the weekly chart, and let me hide some of these waves, and if we add the weekly trend line, look what's going to happen here. We have a little bit more of room to the upside to retest the weekly trend line. And once we have the move up, the price could go a little bit higher than that. It's fine. We know that the market likes to make traps. So if it moves above the trend line, a lot of traders are going to jump into the buy trade at the worst price possible, extremely expensive. So once the plan is to have a little bit more of bullish price action during the week, that we are seeing that confirmation on the 4-hour chart as well with this pennant. So once we have the price moving a little bit higher here, to make the higher high and also hit the weekly trend line at the reversal pattern, we should be ready to take the short trade on the S&P. Only at the reversal pattern, not before, not because the price moves higher. Be careful with that. And the target is going to be the previous low. So let's get ready to capture all this distance on the S&P at the validation. I'm sure you would like to receive this analysis every day. So please join us today. Visit elliottwavedesk.com and then visit the pricing page, and under the pricing page, pick if you want to sign up for the monthly price or the 3-month $199 payment, and immediately you are going to receive an email confirmation with your username and password. So do it now and start receiving immediately all our analysis, trade ideas, and everything. So thank you very much for your time. I hope you enjoyed this analysis, and I'll see you soon. Take care. Bye-bye.